Sarah, go ahead. Maybe tell us a little bit more about your background, and then we'll get started.
Yeah, sure. Thanks for having me. Sorry, I've been having a lot of technical problems this morning. Not really my forte, but it doesn't usually happen like this. So apologies. Yeah, so I split my career between the public and private sector. I most recently was the Deputy United States Trade Representative. I covered Asia and Africa, and I also covered verticals like climate and industrial policy, which is something I think we're really seeing a big change in these days. But I've also in the private sector, I'm at Evercore ISI, where I now cover a global strategy and politics. So really delighted to be here and provide perspective uh, on these issues. I think I've lost my slides here, but happy, Tim, to do it, whatever makes sense.
Yeah, maybe you could just take us through what you were going to show us with slides. Just take us through how to, you know,
You got
the
it.
global nature of our time, how to prepare for a new supply chain, how regulation makes us think more carefully about sourcing things like minerals, graphite, batteries, for example, the geopolitical nature of trade.
Absolutely. So I think the irony of the time that we're in is that we are uh, in need of new supply chains and new partnerships at the same time that our world trade system is under quite a bit of tension. And so we are seeing this transition, which is so important to clean energy. And as you noted, that requires a whole new set of tools, including minerals, which the earth has decided where they're located, not all of us. But at the same time, we are having a more tensions. We are seeing, um, the Inflation Reduction Act that the United States passed has very strict domestic sourcing content in terms of putting the final EV together in the United States, but also requiring some of the materials and the inputs to come from countries where the United States has a free trade agreement. And that, if I had my slides, I would show you is not really how the world is structured today. So the minerals, as you know, are in different parts of the world. Lots of nickel in Indonesia, Australia, lots of lithium in South America, Canada, different places throughout of the world. But the reality is that China has gotten is the furthest ahead right now in the processing of these minerals. So there's certain minerals, particularly graphite, where really almost everything goes to China now to be processed. And so then hence the tension between these they're not technically kind of USTR tariff trade rules in the way that we think of them, but they are trading system rules. And so we saw this year with the United States, they had to make an exemption, for example, on graphite, a 2-year exemption, because the market wasn't up to where it needed to be to supply. I mean, our OEMs literally couldn't source enough graphite that didn't have some Chinese nexus. And so we're seeing these kinds of tensions throughout the world. We also are seeing places where in our critical mineral sector, it's very difficult for some countries to be competitive in the price. We've seen a lot of volatility in the pricing of these minerals. So places like Indonesia, nickel is produced much more cheaply. Lots of reasons for that. Some environmental standards, but lots of reasons. And so we're just this market is not kind of it's not mature enough right now to meet to needs. And then, like I said, the global attentions um, are hotter. We are also seeing this same phenomenon around Chinese electric vehicles. So we are seeing concerns. China has never been a traditional player in internal combustion engine vehicles and ICE vehicles, but they are ahead in many respects on EVs. And there is a lot of concerns that some of that is because of state subsidization that is sort of outside the normal trading rules. And right now they are able to produce a vehicle that is far cheaper, and they have, because of their own economy and excess capacity to meet the demand. So they're seeing a lot of exports, and you're seeing a lot of different countries very, very resistant to that. Just the EU just put in place some tariffs in that regard. The United States has gone even further. The United States is now putting out a rule that says if it has Chinese key components in an electric vehicle, whether that be software or hardware that they believe has technological things that may produce national security risks, you can't have it at all. And so that really, if that rule goes final, will really stop Chinese EVs mostly at all in the United States. And it will also require OEMs that use Chinese parts like GM, like Volkswagen, to reconsider their supply chain. So it is just a very complicated dynamic that at the same time we need our supply chains to shift already for new technologies, green technologies. At that same time, we have a trading system where there's lots of anxieties about particular partners, including China. And so we also see this in other spaces, solar panels and the like. So I just think it's a very, very complicated time. I think that, there's lots of reasons for the trading tensions that we have. I would say they were definitely exacerbated during COVID. Because during COVID, people felt like there were supplies they needed that they couldn't get, and that causes anxiety. And then the other anxiety is as some of these supplies are more technologically advanced. Again, that's not the case for critical minerals, but it certainly is the case for some of the software and hardware, chips, all of these things. We're seeing more and more security dynamics at play as well. And so it's making for a very fraught a conversation and dynamic, I think, throughout the global trading system. The other piece that's going on right now, of course, is we are 3 weeks out from a very big election in the United States. And I think that is also going to really shift how this is seen. Because President Trump, if he wins, and we're just call this as a toss-up for all intensive purposes at this time, but he is very keen on tariffs as a trading a tool. That's something we saw in his first administration. It's something that we saw. That we believe we will see even in more full force again. He is also been a skeptic of the electric vehicle and wind. So there's particular areas of the clean energy supply chain that he's very skeptical of. And so we will be watching very closely if he is elected on particular policies that he might roll back. We are not of the belief that he will be able to get Congress to pass a full-blown elimination of the Inflation Reduction Act. We've seen too much investment in red states, blue states, across the country for that to be, in our minds, a real risk. But we do believe in there's a lot of power in rulemaking. There's a lot of power in terms of, like I said, the administration has taken some flexibility. For example, like I mentioned, exempting graphite requirements for 2 years. Those are policy choices, and we don't believe that President Trump would be as flexible in terms of having the emphasis on the transition. We didn't believe he would be as flexible in the rules in the IRA, so we could see some tightening there. And then lastly, I just want to mention, ironically, There are some places where Harris is more pro-deployment, but there are some places where we do think under President Trump we would see more deployment. The hydrogen rules, as one example, are a place where the Biden administration put in very, very tight rules, a very, very tight standard of what counted as clean hydrogen. And so there we think the Trump administration would relax those rules and actually see more deployment. With Harris, we very much see it as a continuation of the Biden administration, a continuation on rulemaking, a continuation on EPA regulations, some of which will be struck down by courts, but some of which won't. And so at the same time, we're in this very, very complicated situation that we were talking about across the board between climate and trade. We're also at a nexus where we could see two very, very different directions for the United States to head based on what happens in a few weeks.
So Sarah, you mentioned the election and then the impact of the election on trade and the IRA, and et cetera. What other concerns do your current clients have about the landscape today?
Yeah, well, I mean, I think one of the challenges that the election brings is certainty. When you make these kind of investments, certainty is really, really important. And so we certainly have clients in Korea and Japan who have made really, really big investments in particularly in the in battery space, but other parts of the supply chain that are watching closely. I will say, I think we've seen some chilling of investments this year while people are waiting for the election certainty to shake out. I think certainly some of the suppliers are watching, the EV demand. I think that we will continue to see a growth in electric vehicles in the United States as well as throughout the world, but it's not going to be a straight line, a graph. And so trying to anticipate and predict some of that, I think, has been challenging for certain companies in terms of their planning. And I think in 2023 there was just a lot of excitement, and so people are worried maybe perhaps they got ahead of themselves. Again, I think they'll be okay. And then, so we're discussing, they are supply chains are very, very much on their mind, and how to reroute. At the same time, the interesting thing about it is the time lag for a mine is so long to plan and before you get to production. The chemistry of these batteries, on the other hand, is changing quite quickly. So there are certain supplies that they know they'll need: graphite, lithium, some nickel, but some of that is TBD. So they're a little bit learning to flying the plane while they're building it, in terms of making sure that these cycles, these supply chains are in place. In another area, mining traditionally has had labor and environmental concerns that many companies and OEMs and suppliers are worried about. So we're also seeing them push to try to make sure that they can get supplies that kind of meet standards, and where they can, and then obviously consumers are raising concerns where they can't. So they've a lot on their plate right now, our clients.
Yeah, that's very interesting. I'd be interested to hear your perspective on what trade policies can be most effective in kind of enabling us to avoid trading one geopolitical issue related to fossil fuels with potentially another geopolitical problem with sourcing critical minerals required for the electrification of everything. So what do you think can be done to most effectively incentivize and enable us to avoid that?
Yeah, it's a great, great question. I think, I do think there are signs of partnerships between particular countries. There's a lot going on at the State Department around that, of critical mineral partnerships, of maybe we tried to do this in the Indo-Pacific Economic Framework. at least got a little bit underway in that regard. I think what would be most helpful is to have at least a group of like-minded countries who at least agree on a basic set of labor standards, supply standards, environmental standards that people can feel comfortable with, and that they can start to set up some friendshoring, if you will. Right now, the market's not really mature enough in a lot of places to do it. But I think if countries can come together and get some alignment about what they count as good policies, uh, that will give investors some of the comfort to go ahead and invest in these mines and invest in these processes. If they can kind of agree on the front end of rules of the road, because again, like I said, investors they like certainty. They like to know that what they buy is going to be there, and it's going to be there at a level of quality that their customers expect. But it's a long way, because right now, like I said, they're also racing to make these investments and shift, whether it's solar panels or wind, should try to deploy a lot of stuff. And so there is a tension between this sort of friendshoring idea, these sort of good trade rules, and the speed of deployment. And I certainly understand, from an environmental perspective, we certainly want a speed as well. So I think it's just going to be a bit of a bumpy ride.
So I work with a lot of startups. How can they start to think about changes in the global marketplace to be competitive, in the startups in the climate tech space?
Well, I think it's important to to really have a sense of the different startups obviously are, invested in different parts of this market. And I think it's important to understand where the sourcing in their marketplace really is coming from, what it looks like today, and what the potential is for it to look like tomorrow. Because again, different countries, different locations have certain advantages right now in the supply chain. Some of that very much here in the United States. But it's important to understand where else in the world it's happening and what they're solving for. So, are they going to be subject to a set of trade rules? Are they going to be in a situation like we've seen with China, where there's oversupply, and therefore they may be flooding a market in there? So I think that the most important thing is to really take a snapshot of what the global marketplace looks like, and what the potential risks are in and around trade, because that can very much influence the business, and sometimes it can be helpful. Like I said, if you need a domestic production and that's what you do for a living, there's more price flexibility there. But I think everybody needs to understand the picture and what it looks like globally.
Sarah, thank you so much for sharing your perspective with us today. I think we're going to have to end it there and move on to our next speaker. So thank you so much.
Thanks a lot.